So Marvin's tax service had earned but not yet recorded the following client service revenue at the end of the current accounting period. So this is their income. It's a tax service, and this is telling them this is the amount that they have earned from these customers. These are the billable hours, and this is the hourly billing rate. So if we want to first calculate the total amount that the Marvin's tax service has earned from these three customers, we simply need to multiply these amounts. So 10 multiplied by 85 will give you the total bill for account number 4067. Similarly, 14 multiplied by 75 and 16 multiplied by 90. And then you can just add all of the three amounts, or if you like, you can make three separate entries for them. I'm just going to add them and just make one entry for all of the three accounts. It says we need to prepare the necessary adjusting entry to record Marvin's unbilled client service revenue. Now, because they have already provided the service, they have already earned the amount. So it is written that they have earned the amount. Even if they have still not paid sent the bill to the customer, it is fine. It is still their income. And since it is their income, you should record this as your revenue. So we're going to record it as our revenue. And we know that we are going to credit the revenue amount. However, we have not received cash. However, these customers will pay us in the future. So that means this is our account receivable, since we will receive an amount from them in the future, and this is a future benefit, so it is an asset. Asset increase, therefore debit. So this was question 4.5. Now I'm going to move on to question 4.7. So now if I look at this question, it says Milford Corporation pays its employees on the 15th of each month accrued, but unpaid salaries on December 31st, 2011 totaled 175,000. Salaries earned by Milford's employees from January 1 through January 15th total 180,000. Prepare the necessary adjusting entry for salaries expense on December 31st, 2011. So first we just have to make an entry for December 31st. Now, this is an expense for Milford Corporation because it pays its employees, and we need to remember that they pay them on the 15th of each month. Now it says accrued but unpaid. Accrued means that the expense is already incurred. The workers have already worked for you, but you have still not paid them. Now, because something has already become your expense, the workers have already worked for you, need to record it as an expense. So this 175,000 is the salaries of the 15 days. So from December 15 till December 31st, this is the amount that has to be paid. This is an expense that you need to record, even though you have not paid them. So because you have not paid them, this is a liability for you, and you're going to record it as salaries payable. Better not to use account payable and use salaries payable over here. Now let's go on to the next entry. So it says record the company's payment of salaries on January 15th. Now on January 15th is the date that you're going to make the payment. The payment is going to be based on 1 month. So 2 weeks of December, right? So this is the 2 week salary that is still not paid in December. You need to understand that the salary from 1st to 15th December would have already been paid out on 15th December. However, the salary has been accrued from 15th December to 31st December, which still needs to be paid. So this 15 days is $175,000. And the next 15 days from January 1st to January 15 is the next 180,000. So this is the total amount that has to be paid now. 15 days of December and 15 days of January. So the total amount that has to be paid is the sum of both of them. So that means that the cash that has to go from our hands is 355,000, which is simply summation of both of these amounts. Now, of this amount, 175,000 has already been recorded as in salaries expense. So we're not going to record it again because that would mean double counting. However, we recorded it as a liability. So now we have actually paid the 175,000 that was liability. So this liability is going to reduce now. So again, not to use accounts payable, we're going to use salaries payable. So that salaries payable has debited now because you have paid this amount. And the other 180,000 is the amount that you had still not recorded as an expense. So you need to record it as an expense. So this 355,000 is coming 175,000 of the previous month, which was recorded already in the previous month as an expense, and it was recorded as a liability because we had not paid for it. And now since we have paid for it, we need to reduce that liability. And the expense of these 15 days from 1st January to 15th January is now recorded as an expense. It was not earlier recorded. So this was question 4.7.